This is your daily real estate syndication show, and I'm your host, Whitney Sewell. Today is a highlight show that's packed with value from different guests around a specific topic. Don't forget to like and subscribe, but also go to lifebridgecapital.com where you can sign up to start investing in real estate today. I hope you enjoy the show. Our guest is Sanjeev Silla. Thanks for being on the show, Sanjeev.
Thank you, Whitney. Thanks for having me on the show. It's my honor to be on the show. Thank you.
Look forward to learning about your steps in getting here, Sanjeev, and getting into multifamily and why multifamily versus some other investments that you could have. But tell the listeners, who you are, how you got here, and why you're doing this multifamily investing.
Thank you, Whitney. First of all, before I begin, I would like to again thanks for having me on the show. First of all, thank you for your service, what you've done in 2005, 2006 as part of Army National Guard. Thank you for that. And again, congratulations on your year, solely of the year 2005, I believe. And third thing, the show, which you've been providing to us is the most valuable content, very detailed. People like me, not only me, anyone wanted to invest in real estate, especially multifamily, any investment. This is a great place to start. I mean, last few years, I don't watch news. I don't listen to NPR. I do listen to NPR mostly from the understand economic perspective. The last few years, I've been investing my time, coming to seminars, listening to podcasts like Whitney. Thank you for your service on that.
I appreciate that. Yeah, thank you so much.
Thank you, Whitney. I've been investing since 2016. To give a background, myself and my wife came to US in 2004. We grew up in India. We came here in 2004. And in 2010, three things happened to us. One is we had a second child. My son now is 9 years old. He was born in 2010. And second thing, I took a new job with Accenture, which changed my career. I talk about the big picture, thought leadership, how to communicate, how to develop your leadership skills. That's number two. Number three is I was actually stumbled into Rich Dad, Poor Dad book. That changed my whole mindset. Hey, job is not one thing. We need to focus on passive income. So that's where I started in 2010. 2011, we moved to Dallas. And I got an option. I can go anywhere in the US because I used to work with Accenture. I travel across East Coast, West Coast, across the US. We moved to Dallas. We know it's the most happening place in the US. We thought this is the best place to move on. So we moved to 2011 to Dallas. Then things started happening. Since I was talking about that, I know I need to get passive income. What's the best option? I was looking at stocks. I was looking at single family. Then I look at stocks, which we talked briefly before the meeting, right? Whitney, we cannot control if something goes wrong. I cannot call CEO, hey, what's happening with my stock? I cannot control that one. Second was single family homes, where I see it's not scalable. You have to manage toilets and tenants, everything, which, I think we can buy 2 or 3 homes based on the income level. Then I found a way, multifamily is a way to invest, get passive income. That's how I went into multifamily and real estate with me.
Okay, so you looked into stocks, and I appreciate you talking about we can't control it, and I've heard heard somebody talking one day about this exact topic, and he said, no matter how much I invest in Apple, if I no matter how many iPhones I go buy or tablets or what, it's not going to affect the stock, right? I can't control it. I can't do anything. I can't touch it. And so, that's awesome. But I think, you had mentioned that you also looked into single family as well, right? As opposed to multifamily. And what did you discover there, and why multifamily was your determining factors in going to multifamily?
So the reason, again, as you mentioned clearly in our documentation, ideal, right, is that I have a cash flow, right, in multifamily, which you have a cash flow in single family too. But again, it's limited, 1 or 2 homes, right? Maybe 3, based on the income level. So it's not scalable. Single family is not scalable, right? Number 2 is if someone is not renting your single family, is 1 or 0. If someone not renting, your income will be 0, right? And number 3, you have to manage each property is different location. I cannot bring a property management company because if it's a different location, I can't bring, because I can buy a home. There's no guarantee I can buy a second home next to this. There's no leverage of expenses there. So based on this reason, I went to multifamily.
No, that's awesome. And, talk about your team that you all built. You all started this Infinity Investments, and you all been a part of a couple deals. And so give me your goal in this, in Infinity, and what you all are looking to accomplish. And let's talk about how you're going to get there.
Yeah, thank you. So my friends, Vasu, Sashi, Balu, we started this company, Infinity Investments, back in 2017, November. So we all know before we get into business, because we are like-minded, we grew up in the same culture, we understand, we are all, it's like-minded, it's work as a team, right? That's number one. You need to have a good team in place. Number two is my partners, they do have experience earlier and doing a multifamily deal. So it's a small deal by themselves. And they have the experience how to manage that. So I have a team, we can supplement my skills. We have, look into the CapEx, or could be day-to-day operation of my apartment deals, number two, right? Number three is we define the goals. As I mentioned, we define the SMART goals, which is a very key thing. If anybody to have a success, they need to have key SMART goals. They should be able to define. Once we have a SMART goals, we need to define the criteria where we want to buy. I've been investing across the country, but I live in Dallas. I feel Dallas is one of the most happening places in the country. When I moved in 2011, the population around 6 million people. Now, 7 years down the line or 8 years down the line, we have almost 7 million people. The way things are going, by 2030, we will be like 10 million or 11 million with us, right? So it's the most happening place. So we define the criteria, and we told we have to look at B or C class properties. Maybe at least 60 to 150 units. So we have very specific details that I mentioned, SMART goals, and we put a timeline. Maybe in the next 1 year, we want to make sure that we have at least 2 deals under contract. That's exactly what we did. So I know the first deal took almost like 7 months to get a first deal, but I will tell you in all year, when we moved to this country, for me and my wife, it took 7 years to buy a home because we're not sure where to buy the home and which location. But it's confusing because I don't have an education at the time, right? So, but I'm happy to say that, after 7 months, we formed a team. We were able to get a contract in the deal in 7 months. So because of the education, you need to have a mentor. We've been part of that Samart group. It's wonderful, So once we have the contract, we're able to close a deal in like 60 days from that. And the second deal, we're able to close 9 weeks from the first deal. The reason is we got this deal's most happening place in Dallas, and with a median income $70,000. And these 2 deals within a mile apart. So we can leverage expenses, not only, income, we do have optimized expense. That's how we end up with 2 deals last year.
Nice. So I was going to ask you about how long it took to go from the first deal to the second deal, and I'm glad you elaborated on that. And even talking about, building your team and, and you all having, being like-minded, and a lot of that's important. And I'm sure you all bring different qualities to the team, but also having a coach, having a mentor. It's, we've stressed that so many times on the show and heard so many people talk about, that they had this coach or had a mentor, and, that's really what helped push them and give them some guidance and some confidence, in doing this business and moving forward a lot faster.
Absolutely. I can give an example if you don't mind.
Yeah, so please.
In 2014, some of my friends, we formed a team. We wanted to buy an apartment, So in 2014, we went to see it in Fort Worth, which is like 30 miles from here where I live. The broker laughing, looking at the financial statements, you're not there yet. I learned the hard way. So then we understand that there's a way to achieve this one. It's not just your financials. That's why you need to have a team. We can leverage the experience in the financials to buy a bigger deal. Yes, it's all because of education and mentor. The mentor is giving a lot of confidence, and also it's just a confidence. Look at the market analysis. Look at the job market, various factors, right? We talk about population growth, job growth, income level, median income. And there's so many factors that will feel you confident you can go in the right direction.
Hey guys, it's Whitney. I wanted to take some time to introduce you to my good friends over at PassiveInvesting.com. They're a national private equity real estate firm based out of the Carolinas. They focus on acquiring institutional quality apartments and self-storage facilities. They do this with private accredited investor funds. They have a portfolio of over $700 million in assets and control over $250 million in equity from their investors. PassiveInvesting.com makes it easy for you to start investing in real estate without all the hassles. They even have an average 62% repeat investor rate in each offering they put together. They even have a real estate debt fund that offers hard money loans to local fix and flippers across the U.S., which currently has a 0% default rate. To help you learn more, they've put together a free passive investor guide that outlines the 7 red flags for passive apartment and self-storage investing. Visit PassiveInvesting.com/red flags to download the PDF now. That's PassiveInvesting.com/red flags. Our guest is Spencer Hilligoss. Thanks for being on the show, Spencer.
Hey, Whitney. Thanks so much for having me. I'm really excited to be here.
Tell us a little bit about, how you got started investing in real estate.
I found passive investing through syndications through a pretty unique journey. It was one I would just say is wrought with hardship and a lot of hard work and a little bit of good timing. But my own investing strategy is primarily focused passively. And you did mention, of course, we do some active stuff as well, but we focus on multifamily. We focus on real estate syndications. I assume your listeners, if they're tuned into the syndication show, they're already familiar with what that means. That just means people investing together to buy something so big that they couldn't buy it alone. And so, one of the things that I have found and I've come to believe is like a core belief of mine through this journey is that playing financial defense and offense is something that's a choice. And I learned that kind of the hard way from some series of events throughout my family and my upbringing, but happy to share more about that if you'd like to hear about it. But that's really what brought me to this, is realizing we all have a choice. We all have a choice to really get proactive and also make sure we can protect our families from whatever kind of hardship life throws at us.
Yeah. So you started as a passive investor, and that's what opened your eyes, I guess, to the syndication business and just the opportunity here. That's right.
Yeah. And actually, I'll take it all the way back before we even go to the passive stuff, which is, my first real exposure to real estate came all the way when I was a kid. It's when I was 6 years old. My dad was actually one of the top performing real estate brokers in residential in the country. I watched him grind like really tirelessly, frankly, in the 90s. And so I was around that and I just kind of soaked that up. And as a teenager, he was making me work open houses. I was sitting there touring $10 million mansions and kind of glad handing these affluent buyers. I didn't want to be there, of course. It was not where I wanted to spend my time, but life was good, but I was exposed to that real estate kind of culture early on. And then I went through and watched my family go through some pretty tough times. We entered this time in our lives called the dark decade. My younger brother, unfortunately, was diagnosed with pediatric cancer. It led to, he ultimately passed away and parents got divorced, as they typically do in those circumstances. So it led to this series of big financial fallouts. We had to declare bankruptcy. We had to downsize the family a lot. We had to really, really buckle down. And ultimately, watching all that happen after that exposure to real estate, it had a profound impact on me. It had a profound impact on my worldview. And I became kind of obsessed with this idea that I mentioned earlier of playing financial defense. And I was asking myself questions now as an adult, and even all the way through college, if you believe that, where I was sitting there going like, what could I have done differently, or what could I do now as a parent to avoid that bankruptcy? Like what lessons can I apply as a parent to 2 young kids now and a husband? What can I do in the event of job loss? In the event of a terminal illness of someone I care about or myself, or something like debilitating injury, all these different things that is thrown at us in this life. And so my dad was a broker. That's as active as it gets. It's an active role. If you stop doing that job, if he stops doing that job, if I stop doing my W-2 job, that income stops. And so I just thought there must be a better way, So flash forward all the way to about 2016-ish, a few years ago, and I've got this career that you mentioned in the tech industry. I'm out here in Silicon Valley, and I stumbled my way, my 5th software company, Whitney, and I stumbled my way into this amazing lender that's also a real estate tech company. And I was exposed to a bunch of flippers and, entrepreneurs, and they were trying to get me into it. And I researched everything about flipping and wholesaling and all these different strategies across the landscape. I looked at small multifamily, I looked at single families, looked at all these different options. And I also noticed that people in Silicon Valley they have this wealth playbook that's really interesting. And this is the last thing I was going to mention because I think you'll find it fascinating, which is the strategy for wealth in the tech culture goes like this. It's 4 steps. Step 1, join an early stage startup and try to get some meaningful equity in that company, not real estate equity, but company equity. Try to work your butt off. So you work 24/7 in some cases, nonstop, you grind. Step 3, you're going to pray that you actually picked the next Facebook or Google so that your early stage startup equity ends up becoming something huge. And then step 4, you're still going to do what the common playbook is there, which is upgrade your expenses and upgrade your lifestyle so you don't really end up saving much money. All that said, I was following that path, for many years. And despite the fact I started to have this inkling, like I'm not applying the learnings that I got early in my life. And here I sit after reading, 24 books, and networking is like crazy within the real estate community, and deciding on multifamily as our chosen strategy. We've now passive invested in a handful of deals. We also are now active on the syndication side as well. And I just couldn't, I kind of pinched myself sometimes because I couldn't be more happy with the direction that we're headed. And now I get to wake up every day and talk to other people about how great passive investing is, because I don't know anything else where you can basically take your money, put it into something, and have it double within a 5-year period and be low to no tax due on it. It's just, I say that kind of stuff to my tech colleagues, and at first, if they haven't had exposure to that, they're like, "What are you talking about, man? I'd rather go invest in crypto." So, anyways, I talked to you off, but it's been an interesting and occasionally challenging journey to get to where we are now, where we look at passive investing as our ticket to a certain level of financial freedom, where I can be an active parent, present parent, which is my big goal. A present husband. And also be able to feel like we've got great insulation from any of life's hardships that may come at us. And of course, to be able to give back charitably at some point. I'd like to be able to do that very meaningfully.
Wow. So, and you're working for a tech company that funds, the single family type deals. Why not start doing flips or single family homes? Why multifamily?
Yeah, that's a fair question. So we actually went out and we followed initially a path that you've probably heard about for others. It's a common narrative, right? Which is we look locally first. We thought passive investing, that sounds great. We went out locally. We drove the neighborhoods for a year in the Bay Area. We went to the outer neighborhoods. We looked further and further. We devoted whole weekends while we had an infant, just driving around doing open houses, trying to find a real estate agent that was also an investor. We did find one eventually. We did buy a local duplex. And then I realized I just spent $430,000 to get $250 back monthly in cash flow. So that's not a home run. You call that one of those singles to get on base, right? We then went out of state, went the next step. We bought some turnkey properties. Those are actually, we still own those. It's a modest portfolio. They're cash flowing great. But we still found out we have to pick up the phone for property managers that need management of their own. We found out that is not fully passive. That is semi-passive. And that's the thing about turnkey. Turnkey is a fine strategy. It absolutely is. And I am very thankful for the vendor that we've found and we work with now. But it's not as passive as a syndication. So we learned that just from experience. So we did all those things. And then we ultimately realized the syndication path was the only truly passive one that we had found with the level of returns that we could actually be comfortable with. But to your question about the flipping, I can't help but bring up the Robert Kiyosaki example. I'm sure it's been referenced many, many, many times. The bucket and the pipeline. For everyone out there that adores Rich Dad Poor Dad, I'm another devout follower of that ethos in that book. Robert talks about the example of saying, if you're trying to go and get a solid supply of water back to that village, do you want to use the bucket? Do you want to use that figurative bucket? Walk all the way down, fill it up again with that one cash flow moment, that one cash event, dump that cash on the table and say, cool, look at this. And that's what a flip will do. That's what a broker transaction will do. That's what a wholesaler will get, is a one-time cash event. And I was more interested in, how do I build pipeline? Like, how do I build multiple pipelines, stuff that's going to flow? How do I build something that is kind of like the best kind of boring, as funny as that might sound, like something that is going to just continue flowing with wealth, and it's something I can bet on and rely on. And so that's essentially what steered me more towards the passive investing front of rentals. And ultimately, we went through that phase very quickly over a course of a couple of years and decided to go for multifamily because bigger is better, as it turns out.
So, in this passive investing front, like, do you have that financial number, that freedom number that so many people try to talk about or that they talk about it, that you're trying to reach?
Yeah, well, yeah, I appreciate you asking that. It's a common question we actually get a lot from folks in our network these days, which is, well, what are you doing this for? What's your end game? I'm happy to share our number. I will say that this number hopefully is a reflection of two things. I think it's a reflection of our geography, but it's also a reflection of kind of what we consider to be a good balance for us. Some people want to build wealth for very different reasons than us. My wife and I, who's my business partner, Jennifer Morimoto is my business partner and my wife. That's a separate conversation. We can always go there, but we don't necessarily want to buy a jet. We don't need to go have a lavish, huge mansion. What we would like is geographical freedom to live wherever we'd like to live eventually with our children once they get a little older. And we'd like the ability to not stress. We want to take the money question off the table. And so our freedom number monthly is, I would call it around probably $8,000 flowing in monthly would be great. And passively, full passive. And of course, I'm never going to just sit around on a beach. That does sound super boring. I would like to take vacations like anybody else and go scuba diving and all that good stuff. But I would very much like to have a reliable 8K. That'd be great.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the number one resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.